Good morning, friends. Today we are going to talk about uh, the formulas for calculating numerical problems on working capital management. There are so many formulas which are used in the process of solving a numerical problem on working capital management. So students are a little bit confused how these formulas have come into picture, how they are derived. So this particular session we are going to talk about how to derive the formulas uh, as far as working capital management is concerned while solving the numerical problems on working capital management. How there are certain formulas and how to remember these formulas, how to derive these particular formulas is what I am going to discuss with you. So first and foremost, before we go into the topic of the day, let's talk about the the basic foundation. The basic foundation is there is a balance sheet of a company, and in the balance sheet of the company, this is the format we have: the liability side of the balance sheet and the asset side of balance sheet. And if you look in the liability side of balance sheet, there are share capital as an heading, long-term debt or long-term liabilities, and the current liabilities and the current liabilities. Apart from this, we have current assets on the asset side of balance sheet, like cash in hand, cash in bank, debtors, and we will see all these fixed assets, investments, and other assets. So this is the balance sheet of the company, the format for balance sheet of the company, and our core discussion will be on current liabilities and current assets, on current liabilities and current assets. So this is the format. Again, one more format: you got capital, you got loan taken, and you got long-term liabilities, short-term liabilities, that is current liabilities. On the other side, we got fixed assets and current assets. So this is number one. Number two. Now our discussion for the day is working capital. So how do we arrive at the different formulas which are used in solving the numerical problem on working capital? So the formula for working capital is current assets minus current liabilities. So that is the total of current assets on the asset side of balance sheet and the total of current liabilities on the liability side of balance sheet. That is cash in hand. Already I spoke, cash at bank, uh, inventory. That is, inventory can be of raw material, work in progress, and finished goods. Debtors, bills receivable, prepaid expenses, marketable securities, short-term investments. And on the liabilities we have creditors, bills payable, outstanding expenses like outstanding wages, outstanding salaries, outstanding factory overheads, outstanding office and administration overheads, outstanding selling and distribution overheads, provision for taxation, provision for dividend, and other aspects, whichever is short term in nature. So this is the formula which is used for finding out the working capital. So working capital, the formula is current assets minus current liabilities. And other way of putting the formula as far as working capital is, it's a ratio of current assets to current liabilities. So total of current assets and total of current liabilities. So let's talk about the individual items of current assets. Current assets are cash in hand, cash at bank, debtors, marketable securities, bills receivable, inventory of stock, work in progress, finished goods, and prepaid expenditures. So these are some of the main items, majority of the main items of current assets. And in the similar way, we have a list of current liabilities like bills payable, sundry creditors, dividend payable, bank overdraft. We can even include cash credit, short-term loans and advances, and short-term loans and advances, and outstanding expenses, just like outstanding wages, outstanding interest, outstanding salaries, outstanding factory overheads, outstanding manufacturing overheads, outstanding production overheads, outstanding selling and distribution overheads, outstanding administration overheads, outstanding OIOH, or we can put together outstanding overheads. So these are the list of items in a different format, like inventories, accounts receivable, cash in hand, cash at bank, and cash equivalent, marketable securities. And we have a list of items which are liquid assets. Okay, we will not go into this aspect. Current assets mainly are divided into cash and cash balances, bank balances, accounts receivable, that is debtors. You have to receive money from the debtors, prepaid expenses, raw material, inventory, and short-term investments. Current liability, current assets are again. Now there are so many formulas which are used to find out the uh, the estimated working capital. So already, as I told you, working capital is nothing but CA minus CL. As just now we have discussed, CA minus CL. So we have list of current assets like cash, bank balance, raw material, work in progress, finished goods, and debtors. On the other side, current liabilities, we have outstanding wages and outstanding expenditures, and mainly we have creditors and bills payable. So how do we find out the value of raw material? How do we find out the amount of money or capital which is invested in finished goods? How much of money is getting stuck in debtors? So we have to find out all this at individual level, and then we have to aggregate all this, and then we have to find out these items also on individual accounts, and we have to aggregate these current liabilities. And then after you have found out the aggregate of total current assets and total current liabilities, just reduce current liabilities from current assets, you will get working capital. So we will dedicate a separate session on what do you mean by working capital. But uh, for few minutes, I will touch upon this topic of working capital for few minutes. Okay. For example, you go to a medical shop. You go to a medical shop. In this medical shop, if you look carefully, you have goods which are meant to be sold. Goods which are meant to be sold. We have some cash in the cash box, and if you open the ledger account of bank, in the bank there is a balance. Number one, number two, number three, number four. See, if you go into the in-depth details, you will find that some people have to pay money to the shopkeeper because they might have purchased some medicines on credit basis. So these are elements of current assets. So we have to find out the value of these goods, cash, bank, and debtors, and other items which are current assets in nature. And at the same time, you have to find out the current liabilities. Means for the first and fundamental current liabilities, creditors. This guy who is the shopkeeper, who is the owner of the medical shop, might have purchased medicines from his vendor or supplier on credit basis, and this is a short-term liability or a current liability. So we have to find out how much is the amount he has to pay as far as creditors are concerned or bills payables are concerned. At the same time, we have to he might have appointed an accountant or a salesman to market his product. So he has to pay salaries, and sometimes the salaries are pending or outstanding. So this is a liability which he has to pay: outstanding wages, outstanding interest on loan taken, interest, outstanding salaries, outstanding rent for the premises, and many other aspects. So these are short term in nature. He has to pay it, for that matter, even outstanding income tax. So he has to find out what is the amount of money which is outstanding at any given period of time as far as current liabilities are concerned. So individual items you have to find out and then aggregate them, total them, then aggregate the current assets total items. From current assets, reduce current liabilities. So this is one example which I thought of giving it to you, sharing with you. At the same time, let me take one more example. Let me take one more example. The example goes like this. The example goes like this. For example, Tata Motors is there. Tata Motors. Tata Motors has invested in land, building, plant and machinery. Plant and machinery. Okay, and apart from these are all fixed assets. They are not part of our working capital because these are not used for the production of finished goods. But other things like raw material, work in progress, finished goods, debtors, cash, bank balance, these are working elements of working capital. So your capital on the liability side is getting into two parts, getting stuck into two parts, or invested into two parts. One is fixed assets and one is working capital or elements of current assets. So the amount of money which is invested in current assets like raw material, work in progress, finished goods, or stock, or inventory, or debtors, or bills receivable, or cash in hand, or cash at bank, or marketable securities. So your capital is getting stuck. The amount of capital which is getting stuck in all these items of current assets is called as gross working capital or working capital. Okay, from this you deduct current liabilities because this is the liabilities which is giving you cushion to reduce your working capital, and you're reducing your capital invested in the working capital or current assets. So current liabilities are creditors. Mainly it is creditors and bills payable and outstanding expenses. So these people are giving cushion to reduce your amount of capital in current assets. So you have to reduce this much. So your money is getting stuck at any time in a manufacturing unit, either in raw material or in work in progress or in finished goods or in your current assets. Okay, so we have to find out what is the amount of raw material or work in progress or finished goods or debtors where my money is getting stuck or my capital is getting stuck at any given period of time. And the other side, you have to find out what are the elements of current liabilities or short-term obligations which I have to pay at any given period of time. So from CA, you reduce CL, you will get working capital. So we have to calculate working capital requirements. You have to calculate working capital requirements from time to time to find out the total amount of working capital which is getting stuck from the capital. Okay, so the first element uh, of current assets is raw material. So we have to find out the amount of raw material which is getting stuck, amount of capital which is getting stuck in raw material. So for example, you can take tires of purchased by Tata Motors. So at any given period of time, if you go to the factory or manufacturing unit, you will find that there is in the storeroom inventory of tires. So your money is invested over this place at any given period of time you go. So I am using in this particular session a important word called as at any given period of time. At any given period of time. At any given period of time, you go to the factory, you will find raw material. So your money is getting stuck in raw material, your capital is getting stuck in raw material, and you have to find out how much is the money or capital which is getting stuck or invested in the raw material. To find out that, we have a formula. We have a very important formula. The formula is or you want to find out what is the next year's likely working capital, and in particular amount of capital which is getting stuck in raw material. So to find out that, we have a formula. Budget number of units going to be produced in the next year as far as finished goods are concerned. So how many number of units you are going to produce in the next year? That is called as the budgeted production for the next year. Number one. Number two is the cost of raw material. Whenever you are finding out the raw material capital which is invested in getting stuck in raw material, you have to use cost of raw material per unit and average inventory holding as far as raw material is concerned, divided by 12 months or 365 days, or if there is 360 days of working, then you have to take 360 days or 52 weeks, because in a year it is a year which will be having 52 weeks. So now you will question me, sir, how did we arrive at this particular formula? So in this particular chapter or discussion or session, we are going to talk about how we are arriving at this particular formula. Next one is work in progress. So as I told you, one of the basic current assets is raw material. Apart from the raw material stage, we go into work in progress stage. From work in progress stage, we go into finished goods stage. And whenever we go into our factory or whenever we go for an industrial visit, there is at any given period of time we find that there is a work in progress which is there lying idle in the production unit. So the money is getting stuck. So how much of money or capital is getting stuck? is what is to be found out, because if the capital is stuck in this particular element called as work in progress or work in process. To find out this, I should to find out this, we use a formula called as formula to find out what amount of money which is stuck in working capital is budget number of units to be produced into estimated work in progress cost per unit into average time for which the work in progress or process is there in lying idle in the working at the working point or the manufacturing point by 12 months or 365 days or 52 weeks or 360 days. Okay, so this formula will be used. Now we will find out the way to derive of this formula. Derive, how can we derive at this particular formula? Next one is as I already told, uh, so debtors is also a element of current assets, and your money is getting stuck with debtors for a certain period of time, and it is a element of current assets. So we have to find out at any given period of time, your money is getting stuck with the debtors. Your capital is getting invested in the debtors or locked in in the form of debtors, and this is element of working capital. So to find out the element of working capital, you have to find out the amount of debtors at any given period of time, or the amount of money invested or stuck or locked with debtors, because you have sold goods on credit basis, and they tell that I will pay after 2 months or 3 months or 4 months, so on and so forth. So to find out the formula as far as the working capital tied up with debtors, we have to use in relation to total cost price, we have to use the following formula. Budgeted credit sales during the whole year. How many units we are going to sell the whole in the whole year, the finished product, into cost of sales. That is, you have here you have to take raw material and labor wage cost, factory overheads, office and administration overheads, selling and distribution overheads, because these are the expenses incurred for manufacturing and then selling the final product. But depreciation, being a non-cash expenditure, should not be taken into account. So we eliminate depreciation if at all, if it is included in the cost price, into average number of days or the credit period allowed by the company to the debtors. So in this case, the debtor tell that I would require 2 months to pay the outstanding amount from the date of sale. So in this case, it is 2 months. So divided by here it is 12. Sorry. So 360 days or 52 weeks or 12 months or 365 days. So we will see how to derive at this as far as this formula is concerned. In the same way, the amount what you are supposed to pay to the creditors at any given period of time, because you are purchasing the raw material on continual basis, and you are going to pay some amount to them time to time basis, and some amount of money is still to be paid, which is outstanding, and this is the uh, creditors to whom you have to pay the money, because you purchase goods on credit basis. So whenever you are purchasing goods from credit basis, you are purchasing the goods on credit basis for raw material. So here we have to take, whenever creditors are taken about is talked about, we are supposed to take raw material cost per unit. So in this way, this is the formula which has to be adopted to find out the amount of money which you have to pay, or the company has to pay, or the business entity has to pay at any given period of time. So creditors is equal to trade creditors, which is budgeted for the whole year, or number of units sold, number of units produced during the whole year, into raw material cost per unit, because from the creditors we are going to pay raw material, into credit allowed by the debtors, by the sorry creditors. So on similar lines, like debtors have been allowed by us to pay the outstanding amount for credit sales, in the same way for our credit purchases also, the creditors allow us some credit period of like 1 month or 2 months or 3 months, something like that. So we have to take how much is the time allowed by the creditors, either in months or days. So if you're taking months here, you have to take months here. If you're taking days here, you have to take days here. If you're taking weeks, or you're given weeks here, you have to take weeks in the denominator. So we will derive at this formula also. Next one is, if you further go into the balance sheet on the liability side under current liabilities, you will find that outstanding wages. Means at any given period of time, whenever you prepare the balance sheet, you will come across a outstanding liability in the form of outstanding wages. So somebody has worked for you, like your labor or your maid servant or skilled labor or unskilled labor or semi-skilled labor, and you have to pay some amount of money which is outstanding. They have worked, the expenses are done, but you have not yet paid. So expenses are I have incurred, but you have not paid them. So at any given period of time, whenever you prepare the balance sheet, you will find that there is a element of outstanding wages at any given period of time. So there is a current liability because it has to be paid immediately. You can't pay them after 2 years or 3 years. So you have to pay them immediately. To find out this amount of money which is outstanding as far as wages is concerned, the following formula used to be used. Budgeted number of units that has to be produced during the whole year, budgeted number of units that has to be paid, that has to be produced during the whole year, into, whenever you are talking about wages, we talk about direct labor cost per unit or wage cost per unit, into how much time we are taking to pay the outstanding amount once they have the expenses have incurred. So we call it as average time lag in payment of wages. Means today he has worked, the labor has worked, we are going to pay after 7 days or 15 days. So this is called as lag from the date of expenses being incurred. So average time lag in the payment of wages. For example, in our case, maid works in our home at our house. So we will not pay the first day of month's wage on the same day. We'll pay after some, for example, 15 days. So this is the time lag as far as payment of wages are concerned. Divided by 12 months or 365 days or 360 days or 52 weeks. If you take months here, you have to take months here. If you are taking days here, you have to take days here. If you take weeks here, you have to take total weeks in a year in the denominator. In the same way, whenever you open the balance sheet or try to prepare the balance sheet and try to find out the liability side, and in particular the current liabilities, you will find that certain outstanding expenses are there, like creditors and creditors and wages. You have similar kind of expenses which are outstanding, means expenses already incurred but not paid, which is in the form of outstanding overheads. Overheads can be many types, like for example factory overheads, manufacturing overheads, production overheads. They are similar, okay, they are synonyms. uh, Office overheads, administration overheads, selling overheads, marketing overheads, and selling and distribution overheads. So these are the expenses already incurred. For example, I will give a small example of selling overheads. Selling overheads are nothing but the expenses incurred for selling the product, marketing the product. Okay. Now, under selling overheads, I will give a small example, and now you can, after that, you can connect some examples with all these overheads. For example, a salesperson is there and he's been informed that he will be paid commission apart from salary on achievement of a particular target. So, on the very first day, he sold some 10,000 units. So on this, I have to pay some 500 rupees. I will not pay him on the same day. I will pay after 15 days. So this is already expenses incurred. This 500 rupees is the expenses already incurred. Now you have to pay him, but you will pay after 15 days. That is called as average time in the average time lag in the payment of overheads. So to find out the amount of money which is outstanding to different overheads, the following formula has to be used. From this, we have to reduce depreciation amortization. Okay, total overheads we have to reduce depreciation amortization. So to find out this, you have to use the formula, this particular formula. Budgeted number of units you are going to manufacture during the whole year, means that is what you are forecasting for the next year. This many number of units, for example, you are going to produce into overhead cost. So on individual basis, it can be selling overheads, distribution overheads, marketing overheads, factory overheads, office overheads. So I'm taking here total, but it depends from case to case. If the numerical problem is having a split like selling overheads, distribution overheads, manufacturing overheads, so you have to replace this word by an appropriate word into average time lag in payment of these particular overheads by 12 months or 365 days or 360 days or 52 weeks, depending upon the situation. For example, there can be only 360 days and 5 days holidays. So in such a case, you have to take only 360 days. Now these are the formulas which already I have just now spoken. So now it's time for us to derive at the formula. Let's talk about how to derive at this formula, how to remember this formula, what is the logical way of deriving the formula. So first, our discussion will be to find out the element under current assets, which is raw material, and then we will talk about finished goods. Then we will be talking about debtors, and subsequently we will be talking about current liabilities, which is creditors, and wages and outstanding overheads. So how we will find out the formulas for all these different elements of current assets and different elements of current liabilities. And now my discussion will be on calculation of raw material, calculation of money, which is uh, money or capital which is stuck in or raw material, which is stuck in raw material. To find out that, so our heading is calculation of raw material available in the factory at any given period of time. In the factory, whenever you go, there is a raw material invested. There is an amount of money which is invested in raw material, and our endeavors are to find out the capital which is getting stuck in raw material, which is getting stuck in raw material. So for this purpose, I have taken a small example for this particular uh, concept. To find out the formula, I have taken a small example, and let's take up this small example and find out the formula for calculation of raw material. So the first point is calculation of raw material, calculation of raw material available in the factory storeroom. So whenever you go into the factory as a owner, you will find the raw material lying idle. So whenever you go, you go to factory's storeroom, you will find that there is a raw material lying idle and at any given period of time. At any given period of time. For example, if Tata Motors owner goes into his storeroom, there are huge amount of raw material or inventory which is lying idle, and he wants to know what is the value of this inventory. So tomorrow he goes, today also he goes, day after tomorrow he goes, on the sixth day he will go, on 100th day he will go. So at any given period of time, on an average, he is trying to find out how much is the capital which is invested in inventory, and I am talking about raw material. So to find out that, I have taken a small numerical example, and we will solve uh, a problem to arrive at the formula for finding out the raw material. So the formula goes like this. So before the formula, let's take a numerical example. Total number of units which we are contemplating to produce in the next year. So for producing the finished goods, you require raw material. So to purchase raw material, you should know how many units you are going to manufacture in the next year. So in this case, I am assuming that this is an hypothetical numerical example. So I am assuming that in the next year, I am going to manufacture 3600 units of the finished product or finished goods. So to manufacture 3600 units of finished goods, I have to purchase raw material for producing 3600 units. So to produce 1 unit of finished goods, raw material is required, and the raw material which is required to produce 1 unit of 1 unit of finished goods is rupees 100. For example, I am taking an example of a small item called as wooden table. Wooden table. To manufacture a wooden table, which is a finished goods, I require wood, as which is the raw material. So wood goes into the manufacturing of wooden table. So this is the wood is the raw material. To manufacture wooden table, wood is the raw material, and I approximately find out to produce this wooden table of this dimension, this specification, I require wood, and the wood required to manufacture one table is rupees 100. So hope this point is also clear. Hope this point also is clear. So how many units you want to produce during the year? 3600 units you want to produce during the year. And what is the raw material cost, which is incurred for manufacturing 1 unit? It is 100 rupees. Now, why I am talking about raw material cost per unit? Because our discussion is on finding out the formula as far as raw material in working capital is concerned or in current assets is concerned. So now to produce 3600 units, how much of raw material is required? How much of raw material is required? Total amount of raw material required or to be purchased during the whole year to manufacture 3600 units is equal to this into this. That is 3600 units into 100 rupees. The total amount of raw material which has to be purchased during the whole year is equal to 3,60,000 rupees. Hope you have understood. Again, I am telling you that I want to produce 3600 units. One unit, the raw material consumed is 100 rupees. So to produce 3600 units, I have to purchase 3600 into 100 rupees raw material, which is the total amount of raw material is given by the formula 3600 into 100. That is total number of units to be manufactured. That is 3600 units into raw material cost per unit is equal to 3,60,000 rupees worth of raw material has to be purchased. Number one, number two, number three are clear. Number four, number of working days in a year. I am assuming that there are certain working days in the year and there will be some holidays also. In this case, the number of working days in a year are 360 and 5 days goes into holidays. So hope you this is also clear. And I am assuming that the production of finished goods is spread evenly throughout the year. Means how many units I have to produce? 3600 units. How many days are there in a year? 360 days. So on an average, 10 days, 10 units are produced per day. That is the meaning of the word. Production is carried out evenly throughout the year. Evenly throughout the year. Production of finished goods is spread evenly. Evenly means same throughout the year. Every day there will be 10 units which will be manufactured. So this is the assumption to find out the numerical formula for finding out amount of capital stuck in raw material at any given period of time during the year. So now hope this is clear. This is also clear. This is also clear. This is also clear, and this is also clear. Now let's talk about raw material that will be purchased per day. How much of raw material has to be purchased for the whole year? The amount of raw material which I am going to purchase for the whole year is equal to 3,60,000. Okay. So total amount of raw material to be purchased during the year is equal to 3,60,000. And how many working days are there? There are 360 days in a year. So on an average, I am going to purchase on a daily basis 1,000 rupees of raw material. How did I get raw material purchase per day? Raw material purchase per day is equal to total amount of raw material purchase for the whole year for producing a certain budgeted units divided by divided by number of working days in the year. So on an average, I am going to purchase 1,000 rupees of raw material per day. Total purchases per day is equal to 1,000 rupees per day. Now, next point. Raw material is in store for a period of 5 days before it is issued to the production department for converting into finished goods. So once you are purchasing the raw material, it doesn't mean that it is immediately going into the production. It requires some breathing space, and it will be there in lying idle in the specified storeroom before it is issued to the production center. So in this case also the same is happening. For example, you purchase some vegetables, immediately it will not go. You will store it for 1 day or 2 days in refrigerator. So the raw material is there in the refrigerator for 1 day. The same way, if Tata Motors is buying tires, it doesn't go into the manufacturing of tires, finished goods immediately on the same day. It will take some time before it is going into the production. So in the same way here also raw material is in storeroom for a period of 5 days before it is issued to the production department for converting into finished goods. So with this data, so hope this data is clear to all of you. With this data, we have to find out the value of goods or raw material which is lying idle in the stock room of the factory at any given period of time. So I have taken a small table which looks very complicated on the face of it, but I will make your life very easy. Don't worry, be happy. Okay. So now what I have prepared an Excel sheet, and the Excel sheet has some columns like 1, 2, 3, 4, 5, 6, and 7. And from this we'll come to know what is the amount of raw material or the amount of raw material lying idle in the stock room at any given period of time. Please pay attention to this data. So first day of the year, first day of the year is day one, that is on 1st April 2014. I have taken the example of a particular year, which is 14. How much of the raw material is purchased? 1,000 rupees of raw material, because it is told that every day I am going to purchase 1,000 rupees of raw material. You do you remember 3,60,000 divided by 360 is equal to 1,000 rupees of raw material per day. So every day I am going to purchase 1,000 rupees of raw material. So I will given 1, 2, 3, 4, so on and so forth. And this 1st April, 2nd April, 3rd April, so on and so forth. And every day I am going to purchase raw material of 1,000 rupees per day on each day. Now the first days of raw material, I told you the raw material will be in the stock room for 5 days, and on the sixth day it will go into the production center. So this will go into the production center on 6th April. On the 6th April. Hope you have understood. So to this date add plus 5 days. We will get this date. That is the date on which this raw material will be issued to the production center, and it will be consumed in the process of production of the finished product. Now raw material issued to the production center on this date. No, I have not issued anything, because whatever raw material is there, it will be lying idle, and it will be in the raw material stage up to 6th. So now our core concentration is how much of the raw material is pending or lying idle in the stock room on the set date, which is on 1st April. So on the 1st April, it is found that the raw material which is lying idle in the stock room is 1,000 rupees. Now let's go to the second day. Second day also. Now when I am going to the second day, I am purchasing another 1,000 rupees, and it is purchased on 2nd April, and up to 7th April, that is plus 5 days, it will be there in the stock room, and it will be lying idle. So we have not issued till so far anything to the production center. So 1,000 rupees was already of raw material which was lying idle in the stock room. Now another 1,000 rupees of raw material is getting idle. So 2,000 rupees of raw material is getting idle in the stock room, and this is the amount of capital so far invested in raw material, which is a element of capital asset, sorry, current asset under working capital. On the 3rd of April, again I am purchasing 1,000 rupees, and plus 5 days are considered, and it will go into the production. This raw material will be issued to the production center on 8th of April. So until such time, this 1,000 rupees of raw material also will be lying idle, like this one, and this one. So 1,000 plus 1,000 plus 1,000, 3,000 will get stuck in the storeroom. So the amount of raw material lying idle in the storeroom on the third day is 3,000 rupees. Sorry. Now again on 4th April 2014, I am purchasing another 1,000 rupees of raw material. This will be issued to the stock room, to the production center, sorry, on the 5th, plus 5 days. As I already told that the raw material will not go immediately. It will have to remain idle for at least 5 days before it is issued to the production center. So plus 5 days, it will become 9th April 2014. So this particular raw material will go, the date of issue of raw material purchased during the day will be on 9th. So it will be issued to the production center on 9th. So until such time, this 1,000 rupees also get accumulated. So the total amount of raw material is 4,000 rupees now. Now next one is fifth day of the year. Again on fifth day of the year, that is on 5th April 2014, I am purchasing another 1,000 rupees of raw material, and this will go into the production plus 5 days, that is on 10th. So this will be issued to the production center for conversion of raw material into finished goods on 10th April, because it is told that 5 days it will have to rest in the stock room before it is issued, because already some stock is there. So raw material issued to the production center on this day is also zero. So now another 1,000 is getting stuck. So 5,000 is getting stuck. Now on the sixth day, now very important, on the sixth day, what is going to happen? So how much of raw material was there up to fifth day? That you have to remember. You have to remember that on the fifth day, we have a raw material of 5,000 rupees. If you total this, we have a raw material in the stock room of 5,000 rupees worth. Now on the 6th April 2014, I am purchasing another 1,000 rupees of raw material, and this will be issued to the production center after 5 days. That is on 11th. Okay. Now, so how much raw material gets accumulated? Already we got 5,000 plus this one I am getting. This is also getting stuck in storeroom. So the total amount of raw material now is 6,000 rupees. However, if you look carefully, the amount of raw material which I purchased on 1st April will be issued on which date to the production center on 6th April. If you look carefully, now you can synchronize. So this particular amount, this particular date has come. So whatever you have purchased on 4th April, 1st April will be issued on 6th April because here you have noted the date on which this particular raw material will be issued. Hope you have understood. So this amount, so this particular raw material of 1,000 rupees is going to be issued to the production center. So look at this. The 1st April, whatever you have purchased is issued on 6th April. So already we have 5,000 rupees of raw material. You have purchased another 5,000 rupees, sorry. So you got 6,000. But in this 5,000 already accumulated, the old one is removed to the extent of 1,000 rupees. So 5,000 plus this 1,000 is equal to 6,000. But issued is the old one of 1st April is 1,000 rupees. So the amount of raw material getting idle on in the stock room on this particular date, which is 6th April, is 5,000 rupees. Now, next one. Now, talk about, we will take the next 7th day. What is happening to the 7th day? Now, 7th day, let's see what is happening on the 7th day. On the 7th day, that is on 7th April, again I am purchasing 1,000 rupees of raw material. This will be issued to the production center on 12th because it is plus 5 days. So, we are going to add this 1,000 rupees worth of raw material to this 5,000 rupees. So we are going to have a raw material of 6,000 rupees in our stock room. However, please remember 7th April is a date which is the date of 2nd April raw material which is purchased is going to be issued to the production center. So on this date of 7th April, this raw material of 2nd April is going to be issued, which is there in this 5,000 rupees. So 6,000, 5,000 was our cost of raw material which is lying idle, plus another 1,000 rupees is purchased. So 6,000 rupees is purchased. 6,000 is rupees of raw material is there in the stock room, but this amount of 1,000 rupees is issued on the on this particular date. So this is removed. This is removed, and the amount of raw material lying idle will be 5,000 rupees. So 1,000 plus 1,000, 6 times 1,000, 1, 2, 3, 4, 5, 6 minus 1,000 is equal to 5,000. So if you continue like that, you will find that at any given period of time, the amount of raw material getting stuck in the storeroom at any given period of time is 5,000 rupees. Means at any given period of time, whenever you go into the stock room, you will find 5,000 rupees of raw material lying idle. So the amount of capital which is invested in raw material, which is a component of current assets, is 5,000 rupees. So in the examination, if it is some 30 days, 30 days in place of 5 days, so raw material will be issued after 30 days. Can you calculate like this? No, it's a Herculean task. It's a tedious task. It's a cumbersome task, and you are likely to commit some mistakes. So our intention is to get the answer of 5,000 rupees as far as this particular numerical problem is concerned. Now, how will we get it? So this is the formula. The formula is the amount of raw material which will be purchased at which will the amount of raw material in the storeroom at any given point of time is given by the formula number of units of finished goods to be produced during the year into raw material cost per unit into raw material is in storeroom for a period of 5 days before it is used to the production divided by number of working days in the year. So I will just insert the figures. Now, total number of units to be produced during the year is 3,600 into, this is into raw material cost per unit. What is the raw material cost per unit? It is 100 rupees. Already I told 100 rupees per unit. Into how many days it is going to be there in the stock room? 5 days. Is equal to 5 days divided by number of working days in a year. So this is the formula. If you calculate, you will get 5,000 rupees. So the basic background of how this formula has come into picture is given to you. That is number of units to be produced during the whole year into raw material cost per unit into number of days for which the raw material will be there in the stock room for the whole year and divided by 360 days, because in this case I told you that the number of working days in the year are 365 days are for holidays. So the formula which we thought of, if I want to show you the formula, look at this formula. This is the formula which I told at the very beginning. So this is the formula which I am going to work upon. So now budgeted units is equal to 3,600 units into raw material cost per unit is equal to 100 rupees into how many days it will be there in the stock room? 5 days before it is issued to the production center, divided by 360 days. So if you work out this, it will be 5,000 rupees. So how did I arrive at this 5,000 rupees? I have shown you the pyramidal way of finding out the raw material cost, raw material which is stuck in the storeroom at any given period of time. Hope this is answered. Now the second formula. The second formula is same as that of the first formula, but here the only modification is I have combined this one. That is the total cost of raw material purchased during the whole year. Because 3,600 units is the number of units which are going to be produced the whole year, into 100 rupees is the raw material cost per unit. So this, when I multiply, will give you will give us 3,60,000 rupees, which is nothing but the total amount of raw material purchased during the whole year. The amount of total raw material purchased during the year, or the raw material which is going to be consumed for the whole year. So this can be the same way which can be presented. Total amount of raw material purchased during the year into raw material in store for a particular period of time before it is issued to the production center, divided by number of working days in the year. So this is the way we can arrive or derive at or uh, calculate the formula for finding out the amount of raw material at any given period of time in the stock room. Hope you have understood it. Next one. Now let's talk about the formula. Now after we have raw material, we are now we have calculated the formula for raw material. Now we are going to find out the formula for debtors, because this is also a current asset. So when is a debtor formed? See, debtors are formed because of credit sales. If I'm selling any goods on credit basis, then debtors are formed. So, and the debtors tell that they are going to take some time or allowance before they clear the amount outstanding. So that is called as credit period. Credit period. Okay. So we are now finding out the calculations or the formula for calculating the amount of money outstanding with debtors, and debtors are formed because of credit sales at any given period of time during the year. So amount of money which is outstanding with the debtors at any given period of time. So to find out this, I will take a small example and a numerical illustration to find out the amount of money which is getting stuck in debtors at any given period of time. So this is a numerical illustration. The total number of units which are going to be manufactured and sold on credit basis. So not only it is going to be produced, it is going to be sold on credit basis. How many goods units are finished goods are going to be sold on credit basis during the whole year? 3,600 units. So this many number of units are going to produce, and all the units are going to be sold on credit basis. So you have to take only those units which are going to be sold on credit basis, because debtors are formed because of credit sales, and you should not take cash sales, because cash sales is is where cash is already generated. It's not lying idle. So cash is generated and debtors are not formed because of cash sales. So cash sales should not be taken into consideration for the calculation of debtors. So only credit sales. Now these units are manufactured and sold. I am using the word manufactured and sold. They are manufactured and sold. So when you are selling them, per unit there is a cost involved for manufacturing, and that unit of money is going into the hands of the customer and it is getting stuck. So what is the amount of money which is going to stuck per unit? It includes of raw material, wages, and all the overheads except depreciation. So to find out the amount of money which is getting stuck, we have to take into consideration the cost of goods sold, that is the raw material cost, the wage cost per unit, the factory overheads per unit, the office and administration overheads per unit, the selling and distribution overheads per unit, and appropriate other heads of expenses. And you should not take into account depreciation, because depreciation is not a cash expenditure, it is a non-cash expenditure, or any non-cash expenditure should not be included here. So you are manufacturing those goods which are sold to the customer on credit basis, and in this process your money is getting stuck. So how much per unit money is getting stuck? Your money is getting stuck per unit 100 rupees with the data. But how many units you are going to sell during the whole year on credit basis? 3600 units. So 3600 units you are manufacturing and selling on credit basis, and per unit 100 rupees is going to get stuck. So the value of goods which are sold on credit basis and the total amount of money which is going to stuck in the hands of the customer is 3,60,000 rupees. So this is called as credit sales. This is called as credit sales. So hope this is clear. How many working days are there? 360 days, as already we have seen. Now what we are going to calculate, credit sales of the finished goods is spread evenly throughout the year. Means whatever I am manufacturing, I am selling them on credit basis throughout the year on an even basis. Means I am manufacturing 3,600 units on a period of 360 days. Every day I am going to sell 10 units, and per unit I'm money is getting stuck to the tune of 100 rupees. So my 1000 rupees will get stuck with the customer on a daily basis. So that is what we are trying to find out. So let's take the discussion further. Amount credit sales of finished goods is spread evenly throughout the year. So credit sales per day. So I am selling goods worth 3,60,000 rupees per for the whole year, and and number of working days are 360. So 3,60,000 divided by 360 is equal to 1,000 rupees of credit sales per day. So why? Because on a period of 360 days, I've sold goods worth of 3,60,000 on credit basis. So per day it is 1,000 rupees of credit sales to the customer. Now customer is allowed how many days of credit period? In this particular problem, it is given that the credit period allowed to the customer is 8 days. Means today I am selling on 1st April. He is going to take 8 days, so he will pay it on 9th April. If I am selling on 2nd April, he is going to pay it on 10th April. If I am selling it on 3rd April, he is going to pay that amount on 11th April. So 8 days later from the date of sales, he is going to pay the outstanding amount, which is because of credit sales. So till so far, this is clear to all of you. Now let's talk about the question. Find out the value of amount outstanding with the debtors at any given period of time. So at any given period of time, see, it is a continuous sales, continuous cycle. Your money is getting stuck. He's purchasing the goods, he's paying the money, and again he's purchasing the goods, again he's paying money after 7 days. So it's a continuous cycle, and your money is getting stuck continuously. So we have to find out how much of our capital is getting stuck in debtors. So let's talk about that particular point. Now, so this is a pyramidical way of presenting my solution to the answer of finding out the formula for debtors, the amount of money. outstanding with debtors at any given period of time. So let's calculate one by one. Day one, that is on day one, on that is on 1st April 2014. I am selling rupees 1000 worth of goods to the customer, and he is telling that he is going to pay after 8 days. So on 9th April, he is going to pay. So have I collected anything on this first day? No, I have not collected in nothing. I have not collected anything from the customer. So what is the outstanding amount? This 1000 rupees I will receive, which is outstanding after 8 days. So this is outstanding. This is not paid. So this is the amount of outstanding with the debtors first day. 2nd April, again I have sold 1000 rupees of goods, which he is telling that he is going to pay on 10th April because of plus 8 days. So have I collected anything from the customers? No. So another 1000 rupees is getting accumulated to debtors outstanding. So 1000 plus 1000 is equal to 2000. Now on the third day of the month, again I have sold 1000 rupees worth of goods, and which is going to be repaid by him on 11th April. Have I collected anything of the previous day's sales? No. So how much is accumulated? 1000 plus this 1000 plus this 1000 is equal to 3000 rupees. On 4th April, again I am selling another 1000 rupees worth of goods. So which he is going to repay or clear that amount after 8 days on 12th April. Has anything been collected? No, nothing has been collected from the creditors, from the debtors. So now this also gets accumulated because it is after 8 days we are going to get the money. That is on 9th April we are going to get some money. So what is outstanding now? 4000 rupees, which is the capital which is getting stuck with debtors. Now fifth one. On 5th April, again I am selling 1000 rupees worth of goods on credit basis. This amount will be received from the debtor on 13th April. Have I received anything from the debtors of the previous days? No. So how much is the outstanding amount now? 1000, another 1000, that is 4000 plus 1000, 5000. Now on 6th April, again I am selling goods on credit basis 1000 rupees, with the payment of which will be received on 14th April. Have I received anything of the previous day's sale? No. So now the amount of money which is getting stuck is 6000 rupees, 5000 plus another 1000. On 7th April, again I am selling 1000 rupees worth of goods, the payment of which will be received on 15th April. So any amount has been received of the previous day's sale? No. So this to the 6000 rupees, another 1000 rupees is getting accumulated, which is outstanding amount to be received from the debtors. So total amount is 7000 rupees. Now on 8th day, let's see on 8th day what is happening. Another 1000 rupees of worth goods are sold to the debtors on credit basis, the payment of which will be received on 16th April. Have we received anything of the previous day's sale? No. So this 7000 plus this 8000 gets accumulated, and the amount of money which is outstanding from debtors is 8000 rupees as of now. Now let's talk about 9th April. This is very, very important. This is very, very important. Now 9th April, again I am selling on the same day other 1000 rupees of goods on credit basis to the debtor. So now what is happening? Let's see. So in this case, so until so far, how much was outstanding? 8000 was outstanding. So today, again, I have sold how much? 8000, another 1000. So total amount to be received is 9000, because this amount will be received on 17th. But look at this. Have I received any previous days credit sales amount? Yes. Now on this day when I sold, this guy has told that he's going to pay on this date. So this day has come. So he will pay this amount of 1000 rupees, which is there in this 8000 rupees. So I will deduct another 1000 rupees from here. So the amount which is now outstanding is 8000 rupees. Again on the ninth day, which is outstanding is 1000 rupees. Hope you have understood this one. Now, another way. Next, let's look into the subsequent trade sales. So we have seen up to ninth day. Now let's talk about 10th day. So up to ninth day, outstanding is 8000. On the 10th day, again I have sold another 1000. So 1000 plus 8000 outstanding is 9000. But remember, on 9th, on this particular date, this sales which were made, 1000 rupees is going to be received. So I am going to receive 1000 rupees. I have received 1000 rupees. So I will deduct 1000 rupees. So outstanding how much is 8000 rupees. So hope you understood up to this stage. Now let's talk about another. So another one is 11th April. 11th April again I am selling 1000 rupees. So 8000 was outstanding previously. 1000 is getting stuck again because this guy is going to pay on 19. 9000 is going to get stuck. Now on 11th April, if you remember, this guy is going to pay on 11th April. The sales which were taken place on the third day, that is on 3rd April, will be paid. So it is been collected from this amount. This amount of money is collected. So reduce it because this was outstanding, but I have collected 1000 rupees. So 8000 is pending. So if you continue like this, if you look here, 8000, 8000, 8000, 8000, and similarly 8000 for the rest of the year. So the amount of money which is lying out idle or getting stuck with the debtors or which is outstanding with the debtors at any given period of time is 8000 rupees. So this is the way you can calculate. So now let's look at the formula. So this formula is there. The formula is total number of units which are sold on credit basis into cost of goods sold per unit. So I told you what are the cost to be included and debtors allowed how much days. So in this case 1000 units were sold and each costed, so sorry, 3600 units were sold. Each 3600 units were sold on rate basis into cost per unit is 100 rupees into time allowed is 8 by 360 days. If you calculate, you will get 8000 rupees is the amount of capital which is getting stuck with the debtors. So let's go to the main formula which we have discussed at the beginning of the session. Let's talk about that and solve the problem. Whether this particular formula is useful or not. Yes, let's come to this point. Let's come to this particular slide for the formula of debtors. So, hello, जल्दी बोलो, मैं थोड़ा दूसरा काम है, बोलो ना. तो 1 o'clock को मिलते. हाँ, मैं थोड़ा दूसरा काम में हूँ. So here, so 3600 units into 100 rupees into average debt collection period is 8 days is equal to 8 days by 360 days. You will get 3600, sorry, 8000 rupees. So this is the way you can derive the formula as far as debtors is concerned. So in the next session, we are going to take up the rest of the formulas, how the formulas have come into picture. So until such time, take care. Thank you so much for your patience listening.